Good morning, everyone. Thank you for coming along, and we do really appreciate you taking the time to join us today. So welcome to the first of our webinars hosted alongside the Nebraska Society of CPAs. We do really appreciate the opportunity to connect with you all, share a little bit about our story, as well as some exciting opportunities emerging in the ag accounting space. And as Kelly mentioned as well, please ask as many questions as you like, chuck them in the Q&A in the chat box. We'll do our best to answer as many as we can, but if we can't get through all of them, we'll be able to follow up afterwards as well. So ask away. Yeah, really appreciate your feedback and your engagement as we go through this. So before we get into it, I'd just like to really quickly introduce myself. My name is Mitchell Parks, and I'm an account executive currently based in Denver, Colorado for Figured. As I'm sure you've probably noticed, I carry a bit of an accent. I'm originally from a small town called Tapanui in southern New Zealand, where I grew up on our family farm, originally on a sheep and beef property with just under 5,000 stock units before we moved into dairy. So my earliest memories are sitting in the tractor or helping move sheep and cattle across the farm with my parents. So agriculture is a very big part of who I am. For some reason, farming wasn't the only thing I was extremely passionate about. I also really enjoyed accounting and finance as I worked my way through school. After graduating with a BCom in accounting, I spent a few years working for a national accounting firm in New Zealand in their agriculture team. Now at Figured, I've worked with accounting partners and firms across New Zealand and now the United States to help them drive efficiency and increase the value of their agriculture accounting services across their client bases. So it's a great challenge and it really fulfills two parts of my life that I'm extremely passionate about as well. So here's a real quick just agenda for what we want to cover today. First, I'll just give you a bit of an introduction about who Figured is, what we do, and our place in the accounting channel. We'll then take a look at the CAS opportunity for accountants and their farming clients. We'll share some key principles to think about before you begin the journey of agriculture advisory. We'll then dive into the how, and we can work together to deliver proactive advisory services. Finally, we'll finish with some action items and logical next steps to help you move into this opportunity. So, who is Figured? It was founded by two accountants who were also farmers. Frustrated by the lack of financial management tools on the market specifically for the farming sector and their unique set of requirements, they decided that entering data into various systems, relying on historical information for significant business decisions, just wasn't a smart way to work. Designed around the concept of the farming team, Figured utilizes the financial information available to you today in your cloud accounting tools and allows you to input production information to create tangible and meaningful outputs that make sense in the context of agriculture. By bringing the advisor, the farmer, bank manager, even the agronomist together, we can utilize that same information to make really smart and really informed decisions that are going to benefit that farming business. Today, we have over 35,000 farms on Figured, managed by over 500 accounting practices across the United States, Canada, New Zealand, Australia, the United Kingdom, and Ireland. For several years, accountants have been on the move to the cloud, with tools like QuickBooks Online and Xero leading the way. Cloud accounting in general brings so many benefits that most of you will already know. Things like allowing you and your clients to work anywhere, anytime, on any device. Providing a fully integrated platform for businesses to solve their big challenges like accounting, payroll, payments, invoicing, lending, customer marketing. And unlike desktop-based solutions, you can really easily leverage third-party apps for industry-specific verticals, such as agriculture. We know the bulk of agriculture clients are still using desktop solutions today. So a lot of these benefits have actually not been realized by most of them. We also know that farmers need your expertise to navigate the ups and downs of their business. So there's a real need to provide advisory services for the agriculture industry, and we'll touch on that opportunity that provides in just a second. But our team at Figured have come together to help you deliver enhanced farm reporting and advisory services that drive efficiency, growth, and profitability. This enables you to provide real-time financial data and insights across that entire farming team. So, the opportunity for you with Client Advisory Services, or CAS. Let's get into what that looks like in the modern accounting practice. Firstly, let's all actually just align on what CAS really is. It can mean a lot of different things to different people. In the context of this webinar, we're referring to CAS as value-added services, beyond traditional tax and compliance, that help clients make more informed financial and strategic decisions to improve their overall business performance. It's about being proactive and forward-thinking. It's providing high-value services that make a real impact of your clients' businesses, that you can actually deliver today with your existing team, existing workflows, and alongside existing client touchpoints as well. CAS is a way to take your team and clients on a journey into more meaningful conversations that are geared towards understanding farm performance. It's a story that struggles to be told within your accounting solutions alone. We want to be able to take the opportunity to provide services that are beyond just being compliant. Things like planning and budgeting, creating a new three-way forecast, or completing an up-to-date financial analysis of the business. It then gives you the opportunity to be proactive, forward-thinking, and future-focused. Something to think about as well. Farmers don't just need advisory, they really value it as well. We all know our farmers are operating in an extremely volatile industry. Fluctuating market conditions, rising costs, high interest rates, climatic events, they're just some of what they face every day. And they certainly need help of a trusted advisor now more than ever. They do need to be planning ahead. They do need a solid budget. They need the support of those that are actually outside the farm gate. Tax and compliance services alone won't help your clients navigate those really volatile conditions, nor will it help them grow the profitability and sustainability of their business. But that's where CAS comes in, and where you as an accountant can play your part as that real trusted advisor. Furthermore, just some research that we did alongside another one of our accounting partners, we found that 83% of farmers find their accountant really valuable when they provide advisory services, compared to just 23% when providing a tax and compliance service only. So that's a 260% increase on how much your clients really value you and your services that you're providing to them and their business. And when 83% of your clients find you really valuable, things will actually start to look a little bit different for your firm as well. Now, because farmers really value advisory, we do believe that they'll also happily pay for it. So while many of you might think that CAS is growing at a solid rate, around 16% year on year from recent research, when you relate that back to the potential in agriculture, it's actually quite a big mismatch. We've done some analysis across our existing accounting partners who service over those 35,000 agribusinesses globally using Figured's financial management tools. What this graph is showing you is that breakdown across different Figured products, which directly correlate to the services that firms are actually offering, as the data shows, on average, an uplift of almost 200 to over 300% on customer fees. This is from firms who are making the strategic shift from a tax and compliance base to a more CAS-driven service line. What this is telling us is that within your customer bases in the agriculture sector, there is a substantial revenue growth opportunity that's actually sitting right in front of you. Now, one other thing I want to touch on as well, and it's a challenge faced globally by the accounting profession. We know it's proving harder and harder to retain really good staff, especially those with knowledge and experience in the ag accounting field as well. 82% of accountants leaving the profession have more than 6 years of experience. So CAS is a field that more accountants want to get into. It's rewarding and invigorating, but it's also creating a natural opportunity to become involved in that farming team. Someone whose opinion is valued, and they're considered a valuable part of that farming business. So if we just pause for a second and recap those last 3 slides, there's a bit of a perfect storm happening here. Farmers need advisory. Times have never been tougher, but they are willing to pay you well for more meaningful services. Agriculture provides a significant revenue opportunity for accounting firms. So if you want to grow your business, the opportunity is actually very real for you as well. And it's invigorating and exciting opportunity for you and those in your team as well, who are likely wanting to do more of this high value work anyway, not just focused on clients' taxes day to day. But we also don't want to lose sight of this. CARES isn't just an opportunity for your firm, it is one for your farmers as well. And we know that agriculture is a tight-knit industry, and those who work in it have a really deep care for farming. So giving farmers better information for decision making and a clearer view on what their short, medium, and long-term future really looks like makes a really meaningful difference to their success. Accurate and up-to-date information allows them to make better decisions and confidently plan for the future. Having the right mindset, framework, and technology at your disposal is going to help ease a lot of that pressure for your firm, deliver the growth you need, but also help those better outcomes for your farmers as well. So with all of this though, why are we still seeing accounting firms really struggle to take advantage of that opportunity? Well, the reality is that ag is one of the most complex industries in the world. We all know that. There's such a variety of information out there, ways of recording information, ways of being able to present that information as well, and then just down to the client breakdown as well. Accounting firms have tried to unlock this opportunity using what is currently available. That's desktop software, generalist accounting tools, and spreadsheets. The problem is that you can't unlock a specialist opportunity with generic tools like spreadsheets. The same way a really general accountant can't be as valuable as a specialized ag accountant. And even though cloud accounting technology is incredibly powerful, we do know that it is difficult to unlock the agriculture opportunity when we try and combine it with spreadsheets and other desktop-based tools as well. I do want to say general accounting tools and spreadsheets do have their place. Don't get me wrong, but they're just not built to take this ag CAS opportunity at scale. Now, before we show you a framework for establishing CAS in agriculture, there are some fundamental things we've learned along the way, which are really important to address before we get into the delivery of advisory services. So here are the things we've learned from hundreds of our accounting partners like you and tens of thousands of farmers around the world. These are things to be aware of from the outset, but we need to acknowledge that part of what has worked so well in the past from a tax and compliance perspective is also potentially holding you back when it comes to CAS. There is a change of mindset, change in approach, and a change in skills and process that are required as you move into and scale CAS. But first, it's also really important to acknowledge you're really, really good at what you do. No denying that. And you can use your skills in that tax and compliance space to start building the strong foundations of your CAS services. We know that ag produces value continuity. If the approach is correct, they'll come on this journey with you. We have seen it repeated time and time again. It's also really important to have a coherent approach in regards to your strategy to grow into CAS. Spending time getting this right before diving off into tactics is essential. The strategy needs to acknowledge that some of the things that make you great in tax and accounting and bookkeeping will be of benefit to you when establishing CAS. So that's things like the fact that you already have a great customer base, that they then can be leveraged into this opportunity. You know the numbers. You're the financial experts. You have high levels of trust from those customers. You may have a known competency in a vertical, like agriculture. You may have a thought leadership position in the market. You may take a leadership position on technology and tech stack decisions for your clients. We know that this opportunity also is not limited to just CPAs. There is a really unique position for bookkeepers and bookkeeping businesses to take advantage of these same opportunities if they have those same fundamental strong foundations. When the above is done well, it allows that farming team flywheel to really start to spin up. Secondly, from our experience, we see that accounting firms' CARES goals largely fall into one of these buckets. Sometimes there might be a few more if it's a larger firm. What we've done is break it down into establishing CARES, getting started, scaling CARES. You're already doing a little bit, but maybe it needs to be more efficient. And then optimizing CARES. So that's adding in additional CARES services once we're really going. It's key to understand here where you are so that you know what you're trying to achieve. Have a bit of a think on where you might think you sit in these three buckets today. Do any of them look and sound familiar? There may be some considerations for you to go through when we go through a bit more of a demonstration later on. Now, regardless of where you are or what your goal is, this is a must. You have to be opinionated. Set it up right. And don't put yourself into a tech stack mess. Most of your farmers aren't the financial experts. You are. You wouldn't tell a plumber what tools they should be using when you give them a ring. And your clients shouldn't be telling you which tools to use either. You can't establish or scale CARES with that tech stack mess. So what do I mean by that? It's using different tools and different platforms across all your different clients. If you let your clients decide what tools you use, it will result in multiple systems and inefficiency. You've earned the right, actually, to take that really strong position on the tools that you use and the ones that you know work for your business and those services that you're going to provide. Accounting firms are best placed to recommend the best solution. It is 100% in your wheelhouse. Farmers and clients in general are unlikely to have considered this yet this is core to you being able to deliver those extra services. With the shift to the cloud, you have a generational opportunity to actually introduce vertical specific services across your client base. Now, this changes what we value and therefore how we measure it as well. The tax and accounting service has been consistently optimized and improved for decades, but 95% of that innovation has been focused on those internal improvements driven by incremental efficiency gains and accuracy. The service line, though, actually hasn't materially changed. We've all just got really good and way better and better at delivering it. But CARES requires a shift, one that innovates towards providing greater value for your customer. You'll need to focus on how your services directly benefit your client's bottom line. And it is a big step. But when developing CARES, firms should be looking to address that customer value first, and then look to layer in how and when they can scale this to become more efficient, not the other way around. It's moving from innovating internally, optimizing your own processes, to innovating externally, providing better customer value and things that are meaningful to those clients of yours. So I really like this analogy as well. And it's not one that we came up with. It's one of our partners, and when we were catching up with them, said, and it's really true. CARES is shifting from looking through the rearview mirror and looking out the windshield. Through that rearview mirror, moving to the windshield. A fundamental goal of CARES is to shift your practice from being reactive to becoming more proactive. At its very core, CARES is about taking a proactive approach to bringing new insight to your clients. And let's acknowledge that this is going to feel different, because it is different. Most of your work as accountants to date is probably looking back on past results and performance. As you step into CARES, there's a few things you do need to do. You're embracing a consultative approach. Move beyond simply reporting, sharing numbers, and taking a hands-off approach to helping farmers grow their business. Instead, you're delving into interpreting the data. Provide key insights, offering strategic recommendations that drive business performance and growth. Now, that is obviously easier said than done sometimes, but we can show you some of those ways to do that a bit later on as well. Then it's focusing on future potential, not just historical data. Think of tax and accounting and its emphasis on historical accuracy as that rearview mirror, looking back at what's already been and gone. And then CAS is obviously that windshield. It's future focused. It's about using financial data to provide a clear view of what's coming up, both in terms of opportunities and obstacles, enabling you to get ahead of the curve by being more proactive. You're now repositioning your services with your tools and team to be better placed for having new conversations. Conversations that come off the back of the value. It's moving from an annualized tax relationship. And you can just start small. Although small, it's enough to actually open that door for where you would like to be in terms of the type of clients and relationships you have. The motivated and empowered team you work with, and of course the revenue your business generates, but most importantly, the impact you're going to have on your clients' businesses as well. So, given CAS is really about living in the customer's world, be prepared to go much deeper with your vertical skills. Whatever the industry is, really. It's really difficult to differentiate yourselves from the eyes of the customer when you approach CAS as a generic service. So, for example, in agriculture, we know that inventory is managed and accounting for in a really different way to other industries, i.e. livestock is born and raised, crops are grown from sunlight and rain. These are not purchased like traditional assets are, but developed naturally, which makes understanding break-evens and other financial metrics incredibly difficult. The right tools can help you easily account for these in very unique aspects. Metrics like profit per bushel or revenue per acre are essential for agribusiness, but without the right tools, they're extremely difficult to gain insight to. Ag-specific tools can combine the latent data asset that is your financial data held within the cloud with a variety of farm production data to then provide that unique view of a farm's true financial performance, but also in terms that make sense for the business of agriculture. And farmers need reports tailored to their industry, things like crop season summaries or livestock performance metrics. Being able to generate these agri-specific reports easily, without a manipulation in spreadsheet, makes it easy for accountants to provide relevant and timely advice for their farm clients at scale. Now, this is really important as well. Being really clear on your objective, your tech stack, your positioning, and the shifts you're making to get there are all critical, as we've discussed. Similarly, that clarity about who are and aren't the right type of clients is a real determiner of success. Who are the types of farmers who really value your care services? Who are those who need help the most when the season's looking a bit tough? Who are those who are really looking to the future, to the growth and expansion of their farm, or even succession planning? Understanding who fits with your brand, your people, and your proposition, controlling that front door accordingly, is crucial to having a high-value, scalable care service. So, what does getting started actually look like? What are we going to do? We're going to cover 3 practical ways that we believe you can begin to scale advisory for agriculture. This is a really simple framework that we can work to. Prioritize, productize, and communicate. First, prioritize. Where are you going to start? Who are you going to provide these services to? We know that you can't do everything for everyone today. So let's identify the easy wins and those clients who really need your expertise and advisory services the most. Second, productize. What services are you going to provide them? And how can you use the right tools and technology to standardize and deliver them at scale? But also monetize that advisory as a service. Then lastly is communicate. How do you communicate the benefits of these services to your farm clients? And what are some practical ways you can do this? Your farmers need to know what you can do for them and the value that your services bring to their business. So we'll start with prioritization. Unlocking this is often the key to actually just getting started. when you're thinking about CARES, it can be very difficult to break it down into manageable chunks. You don't want to try to ball with the ocean or get buried in a project so large it takes away from the core business. Where firms are finding the most success is actually segmenting that client base based on their needs, and then prioritizing the clients that need and will value this service the most. That way you know exactly who to start with, what they need, and how you can add value beyond compliance to their business. And this makes it really easy to get started, which in some cases is actually just the hardest part. So as a starting point, this is what we mean by segmenting your clients. There are things you can easily identify in your client's data and personal knowledge of your clients to be able to segment them in different ways. So for example, those that you can work with more efficiently. Are they currently planning and budgeting on a spreadsheet? Are they double handling their information through multiple products? Did you have anyone ask you for a last minute plan or budget? Then there's those that have growth opportunities in front of them. Is their operation growing? Are they leveraging debt in the most efficient way? Is the next generation getting ready to enter the industry? Do we need to be thinking about family succession options? And then there's those who are under pressure, the highly leveraged, significant interest costs, or those who are disproportionately affected by changes in various market conditions. The great thing about this is that you probably already know who fits into each of these segments. But if not, these are characteristics that are easily identified within your client's data. So thinking about where many firms are at now and where we think it's important to get to, it's important to note that we want to be clear that we're not saying that if you want to grow your advisory service, then you need to go out and find all these new clients to plan with because your current clients haven't expressed an interest in planning. It's the opposite of that. We know that when firms take this initiative, the top performing ones saw 79% of their new advisory revenue from existing tax and compliance clients. So it's quite important to identify where the new revenue will come from in your existing portfolio. This pyramid isn't just representative of all firms, but it's broadly a typical breakdown of client portfolios that we've seen in the market. So you have that top 10% of clients that you often do some form of proactive planning for. It's a white glove service, but it's really hard to scale. Then there's those that you provide a plan for when a situation or a catalyst occurs. Ad hoc. It's when they need it for a bank, need it for a succession plan, a purchasing decision, for example. Very, very reactive. And then there's that ever-widening middle band. There's a cohort of clients who could and should be planning, but haven't expressed an interest yet. And you're not currently providing it to them in a structured way. Often these relationships are just currently based around a tax engagement. We're trying to move this pyramid here to something a bit more like this, where the two segments in the middle become that middle majority and represent a significant opportunity if a scalable service is implemented. The question to everyone on the call is today, could technology allow us to take away some of that white glove advisory service, but layer it into this cohort in a really efficient way? And lastly, and realistically, there's always going to be that portion of your client base who just aren't going to get into advisory with. And that's okay. But they perhaps could still do with some form of light touch technology, delivered insights and outputs. You can't do this for all your clients in the middle section at once, but you can start by prioritizing those that need and value it the most. Right, so now that we've identified those segments, let's have a look at some practical use cases and how you can design and deliver those services at scale. How are you going to deliver value in a standardized way that you can then monetize? In the same way as prioritizing customers is critical, so is productizing the services you deliver. There are stacks of agriculture-specific features and outputs that are available out of the box when you start using vertical-specific tools. We've heard from our partners everywhere how much they want to see the how. How is to actually assemble these advisory services and standardize them and deliver them efficiently, all while being enriched with agriculture-specific insights. So today's also about helping you do this, stepping into that opportunity and unlocking it together. Before we jump into a quick demonstration, I want to share this slide with you. This is a version of what we think a productized and scalable CARES service could look like. A bit of an end game or a vision. We think ideally you want to get to this kind of solution where in each of these different packs, these different things that your clients get as part of that productized package. And each of these packages can almost map back to those different customer segments that we identified earlier as well. Something that's also worthwhile to note, CAS doesn't just have to be something that the most senior people in your firm do. We want it to be something that the whole team can do. When it's productized, you get that ability. It's a way to build more capability and more power within your own internal network to provide these services and opinions that add value to your clients and their business. For example, you could have one of those junior accountants preparing a draft 12-month cash budget. We can then have it handed off to the senior manager for review. And then the reports and everything can still be done across the firm. When those reports need to be done on a 2-monthly basis, each of those different team members can be involved in that process between drafting, reviewing, and finalizing. The key here is that to be scalable, it needs out-of-the-box functionality. None of the outputs should be massively high touch or involve highly manual processes. We want your time to be spent in client meetings, helping them with their business, not copying and pasting data into a complex spreadsheet, where then there's no record of what is the most recent or up-to-date plan. So let's have a really quick look at what this process might look like to create those high-value conversations. So really quickly, just want to take you through what that process might look like to create those outputs. So when we start to look at this, we're using that live financial data that's available in your accounting tool. In this example, I've got a QuickBooks Online file that's connected into Figured. We've got the data there in real time, and it's actually going to start flowing into the Figured platform live. Information's coming through, and we can start to see each of those individual transactions coming in. We're going to pull in each of those invoices, expenses, journal movements, bank transactions, whatever it might be, and actually be able to break it down into something that's going to be tangible for you to then provide some of these more meaningful outputs. I can go into my fuel and oil bill as well, and here's it going directly back into the QuickBooks Online transaction. Do remember that this is all going to be live and up to date as well. So if I know that this was miscoded, for example, I can readjust it, hit refresh, and I'm back into using that up-to-date financial information back in my accounting tool again. So let's see what establishing this could actually look like. Using the allocator tool, we can start to allocate each of those transactions into those specific areas of the business that makes sense where we want to track that production information. For example, I might have this loan interest movement, and I want to put that into my corn 2023 season tracker. You could have other account journals such as fertilizer, animal health bills that we can then allocate specifically into the livestock production tracker. So then we're starting to build out this analysis of those different profit centers within the business in a way that's going to be meaningful and tangible. For crop level reporting as well, let's break it down into a field level. Split it out evenly across each of those fields based on their acreage, or maybe just split it out equally as well. We're just trying to get it to reflect what actually happened on farm. Let's make it relevant. Let's show how this information can be used to make smart decisions in the future, not doing everything based on that historical information. As each of these transactions hit, we can allocate it and get an up-to-date view of where we're sitting live and in season. The other thing is, we don't want to be double handling all this information. If you've already reconciled it all back in QuickBooks or Xero or your other cloud accounting tools, we can then set up these rules to allocate it directly into those production information. So in this case, I might pick up any of my overhead accounts, and I know for the 2023 season, I need them to go into my corn crop, my soybean crop, and then I might want to allocate them evenly as well. So by default, the moment I've reconciled that information in my accounting tool, it's going to flow down and be allocated directly into my production and profit centers within the business. So these production trackers are then how we actually start to break that information up into more tangible ways. For example, in my corn season, I've got a quick summary of KPIs of where we're sitting at live and in season, combining actual information, but then also that forecasted data as well. So I can start to plan out what my future income might look like. I can start to plan out what different harvest quantities might look like from a bottom line level. We can then start to break down each of these different direct cost segments as well. So in this case, my seeds and plants, each of these is representative of an actual transaction that I've reconciled back in my accounting solution. I've mapped it and allocated it into this production tracker. And then I can see each of those invoice lines broken down at a dollar level, at a per bushel level, at a per acre level, ways that are going to be meaningful and tangible. Remember that these can also be allocated if you're thinking in a crop sense. Let's break it down into a field level as well. So up in here as well, we can start to see what is our harvest looking like. We can have this come in when we actually harvest it, but we can forecast for it as well. All of this information and all of this data is always going to be then feeding into those actual reports and outputs that allow you to have that tangible conversation, something that actually has meaning to your farming clients. What can they change on farm? We know that farmers are so tangible, and traditionally looking at the numbers hasn't been a way for them to see a direct impact on farm. Again, we're seeing those sales broken down. When we're then proving this information into these outputs that actually make sense as well. So I'm going to run my corn report for the 2023 season over the whole year, or I can break it down into manageable chunks. Let's say I just want to view the last 6 months. We can do that as well. What you're then getting is these outputs, again, they're relevant and they make sense. You're seeing it at the per bushel or the per acre or the per field level. It then lets you go into the details and actually have a conversation that's empowering for them, showing something that they can change, but it's also on their own terms. When we save these reports as well, we can then export and share it across that whole farming team. Back into that mantra of we were saying with our figured is all about bringing together that team. We're all using the same data. We're all using the same information to make decisions. Email it out, send it out live across to the rest of those clients. Really quickly touch on livestock as well. Here's where you start to show it in a way that's, again, makes sense based on what's actually happening on farm. We can show what those births are, births, deaths, and then also those aging movements as well as we move throughout the year. All of these transactions are going to be live as well for our purchases and sales, tracing directly back into those invoices and those expenses as we move throughout the farming year. Breaking it down again into that information that makes sense to you, but also makes sense on a practical sense for your clients as well. So then again, that information is flowing into something that's going to be a meaningful and tangible output. What was our gross margin? What was our break even? Did we overspend on fertilizer? Did we overspend on animal health? We can start to analyze and break that down. The last piece I just really wanted to touch on is being able to automate this as well. So using a report pack, we can start to build out a standardized, scalable output across all of your clients. So remember what we touched on, saying that we can't be doing different things for different clients at different times of the year. Using something like a report pack, in this case, I have a cash flow report, a P&L report, and a variance report. I've got it standardized across my organization so that no matter which farm I'm on, I can run this at any point in time, and I know that I can bring up farm A and farm B, have two sets of report packs beside each other, but the two of them are actually going to be based on the same categorization. You can actually start to do a meaningful breakdown across those two bits of information. And then we want to start to schedule it as well. So breaking it back into being able to bring in that timely information. When we think about reporting in an ag sense, traditionally, it's anywhere from 12 to 18 months past what's already happened. Think about how much more powerful it would be if you can start to make a report and provide profitability analysis at the end of each month, even just at the end of each quarter, or preparing an analysis right at the end of harvest season, so that we know what our break-even cost might be. What's that perfect bushel price that we need to be able to be really profitable? Or what time of year should we look to be selling these cattle? It doesn't help when you can only do that 12 months after the fact and saying, maybe we should change this. It's too late. The corn's already been harvested for the year. Or they might have already made a big prepayment for fertilizer or seed or whatever it might be. We need to be doing it in real time, making it live so that then your clients can go out and actually make a meaningful impact that's going to have a real benefit on their business profitability this year. So we've got that report pack. It's broken down. Set it up how you want. but we know that it's standardized across each of these firms we're viewing at. And then here's my cash flow report, my variance report, and my crop season summary report. I could run this each month, I could run this each quarter. But I know that I'm always going to be looking at the same report and the same output, no matter when I'm trying to run it as well. Awesome. Now, the final part of our framework that we talked about was communicate. The truth of the matter is, none of this is actually going to make any difference if you don't change how your clients can view you. And that starts with talking to your farmers about the value it can add in ways that they can actually understand. For generations, farmers have seen you as that end-of-year process. It's looking back on what has happened, the rearview mirror. Or worse, they just see it as a way to save on their tax bill. But advisory, we now know, is about looking forward. We want your farmers to see you as that windshield, the people who can tell them what might or will happen in the future, the ones who can help drive their business forward. It's not just as a way to save money, but actually a way to make money as well. But your farmers aren't going to ask you for things if they don't know you do them. So what do we have to do? We have to communicate the value of your services in ways that actually resonate with them. So if we're going to help you shift the way you're seen by your farmers, there are some things that we need to be aware of before we can do that. Now, I'm willing to bet that most of you on this call find marketing pretty challenging, whether that's getting started, knowing what to talk about, or just finding the time for it. There's one thing you need to know straight off the bat. You're definitely not alone in this. So Carbon's Global Practice Excellence Report is a piece of research covering the accounting practices of all shapes and sizes on a global scale. And there's one specific thing I want to call out, and it's why focusing on helping our partners with marketing is really important to us as well. The report looks at capability across 12 key areas, including things like strategy, process, change management, technology, etc. And then we look at what really separates the leaders from the laggards. The single biggest capability wasn't where you'd probably imagine it would be. It wasn't in tech, it wasn't in people, training, culture, KPIs, but it was in marketing. The main characteristic that separates those leading firms is communicating with their clients on a regular basis about things other than what keeps them compliant. And before you go away and start putting marketing plans together, we need to understand that CAS is also a discretionary spend by your customer and what that means. Tax compliance is a legal requirement and therefore a compulsory spend for your clients, whereas CAS is a choice. So you're not just competing with other accountants or advisors. You're now competing for other uses of your customers' money as well, whether that's other services for their business, family vacation, a boat, for example. It's a choice world. And that's a really big piece to get right and consider in your strategy. It's a big shift to competing for your customer's share of the wallet. It requires a shift in how accounting firms position themselves, but how they communicate and market the services that they provide as well. So what is that shift? Really, it's simply as putting that farmer first, putting yourself in their shoes and taking them in their terms and things that they can relate to. We know farmers are immensely practical people. They spend their lives solving practical and tangible problems. So when we're talking to them, we need to acknowledge this. We want to talk to them about things in terms that are relevant to their world, to demonstrate how you can help them solve real, identifiable problems. Ask a farmer if they want to buy a long-term scenario plan for $2,000. A few might say yes. It's probably that 5 to 10% who are already those high-value, high-touch clients. The rest, probably not. But what if you asked a farmer if they wanted to go into the season with certainty around their business looks like, if interest rates remain high, go higher or hopefully fall? What if they could also get a view on how the operation would look if they did purchase the property down the road? Or if they replace machinery or build new silos? Suddenly you're talking about things that have relevance and meaning. And when that happens, the perception of value becomes quite different. While we're thinking about that, it's a good idea to have a think about your own website. Many accounting websites talk about the amount of acres under management or the number of years of experience. In other words, it's about themselves. But where do they talk to the problems they solve for their clients? The ways in which they can help? What if they featured stories more on their own profiles? What do we think is more appealing for a farmer and another client to hear? When we do this, we shift their perception, and you remember the value that they represent to them. Remember that 23 to 83% stat of clients who find their accountants really valuable. And the great news is that spending time on that is incredibly worthwhile. As we touched on earlier, you're building your CAS work on these amazing foundations you already have with your farmers, the relationships and trust you've built. So it should come as no surprise that your customers are going where your CAS leads are going to come from. There is a real untapped potential in the book of business you have today. When we think back to the profiles we talked around prioritization, many of your farmers will fit these and these other relevant profiles right now. And then many of them will already be thinking about getting more on top of their numbers, or perhaps purchasing other properties or expanding their operations in other ways, looking to the next generation to take on the farm, and so on. And so when you're talking to them about your CAS services and ways they relate to, they become real leads for your CAS business. It does start to make sense. So what are some examples of the types of things you could do to communicate value to your clients? These are just a few examples, from hosting in-person client events, running online webinars, sharing success stories or case studies from your clients, running print or digital ads, creating website pages and email marketing, a few examples. And this is such an important part of CAS because when we tell farmers about it, things really start to change. So as an example, we actually recently helped a firm host an in-person event. It's the first time they'd ever done it. There's about 40 or 50 farmers in the room, a mix of existing clients and then a couple of new prospects as well as some local bank managers. So I also heard from a farmer of theirs who was at the event, and he had switched accountant to a figured partner on an advisory service offering alone. They'd had a $1 million swing in their first year. Coming from an accountant who was tax only, they turned a $500,000 loss into a $500,000 profit. Not only that, they talked about the human aspect, how it took away their uncertainty over the future, which took that worry away. It just made their day-to-day lives a heck of a lot easier. And there's nothing more powerful than farmers hearing stories from one of their own. And you don't have to do this alone. It's something we invest in with our accounting partners, also with the support that's here to communicate the value of your services in ways that resonate and excites your farmers. It's not only about helping you create plans, but also the material you need to deliver on those plans. So the emails, the website pages, events like the ones I was just talking to. Awesome. So in terms of what's next, we want to take what we've covered today and give you some tangible next steps. So there's 3 things I want to leave you with today. Firstly, most of today's content has been put into a free online guide that you are welcome to download by scanning this QR code on screen. We produced this resource in partnership with Intuit and the team from Insightful Accountant. It shares some really practical tips for getting started with CAS. It also includes a few testimonials from accountants and Intuit and shares insights from our experience working with ag partners in the last 10 years. Give you a moment to grab that if you're after it. Cool. Second piece, if you would like to learn a little bit more about Figured or chat further about anything we've discussed today, or even book a customized demo or something like that to see how Figured could work for you, scan this QR code here and that'll just book time to have a chat with myself. So I'll give you a moment to scan that if you'd like to. Or the other option as well, just flick me an email, mitchell.parks@figured.com. And then the session's also being recorded, so you'll be able to review some of this information again as well. Give you just a moment if you're after that information.